Welcome to this lesson on supply and demand zones. Supply and demand zones are related to support and resistance, so during this lesson I'll also use examples of support and resistance zones. Now, supply and demand zones are determinant zones which can shift the price up and down. A supply or demand zone can be considered valid if the price approaches that zone many times in the past. A demand zone in the market is where buyers will try to buy. In a supply zone, the sellers will try to sell. So if there's more demand by buyers in the market, the price will go up. If there's more supply by sellers, well, then the price will go down. When the price reaches a supply or demand zone, the next movement of the market is critical, and it can be a great opportunity for you to trade in the market. Supply and demand zones are somehow similar to supply and resistance zones because they're decisive zones. Now, combining supply and demand zones with support and resistance zones can be powerful analysis, which can give you more indications to successfully predict the market. Okay, let's move on to the charts by showing you some real-time examples of supply and demand in different time frames. You should remember that supply and demand zones suit mostly swing and day traders because of the higher times. In lower time frames, the supply and demand can be less accurate, but that doesn't mean that they aren't accurate at all in lower time frames. So make sure to analyze the market accurately if you decide to enter it using supply and demand zones in lower time frames. Now, before I continue explaining and showing examples of supply and demand on some currency pairs, let me show you first how to draw supply and demand zones using MetaTrader 4. From the toolbar at the top, right-click any of the tools, such as a trend line or a horizontal or a text, and then click on the Customize option. On the menu, we have the available tools which can be added to MetaTrader 4. So they'll show up when you add them. And on the right menu, we have the tools which are already available in the toolbar. So you don't need to add any of those. From the right menu, scroll down with your mouse and choose the rectangle option, then click the Insert button. Now, let's do a quick draw to show you how to draw supply or demand zones. First, you choose the zone, then you adjust the height of the rectangle. As you can see, the rectangle I drew doesn't have a body color, but only border colors. So this can be kind of confusing with other colors on the chart. You might not be able to identify supply or demand zones when you trade. So to spot these zones easier, simply double-click on the border of the rectangle and go to Properties. In the menu, find Parameters. Make sure you check that option, Fill, and now the rectangle will have a background color, and you can customize the color to your liking. Now, the chart is showing the euro against the Swiss franc currency pair in the daily time frame, and in choosing a daily time frame, I'm doing that because higher time frames tend to form more supply and demand zones. In 2019, the price of the market during that time was trading between 1.08 and 1.10. 3 months later, in December of 2019, the price started to fall quickly with a strong downtrend. After reaching the 1.05 price, the euro against the Swiss franc currency pair was trading at 1.08 price. The chart is also showing a double bottom pattern which is formed, and the price has failed to break the resistance zone highlighted in pink. Now I'm going to draw a rectangle on the resistance zone, and this is an example of a supply zone. As you can see, the price has failed to break through this resistance for the third time. This is called a supply zone where sellers are pushing the price down because of the supply by sellers. Besides the supply and resistance zones, you're probably thinking that there are no other technical analysis factors in this example. But if you remember the lesson on market patterns I just explained, you can spot a potential triple top pattern forming. Here's the first top, which is the first resistance zone. The price created a support zone. The buyers on the market pushed the price up, and the price tested the resistance zone multiple times, but couldn't break the resistance zone. The market is testing the resistance zone, which is also the supply zone, and couldn't break that resistance. So, many resistance zones were created. The momentum of sellers, because of the supply in the resistance zone, pushed the price down, but the price didn't reach the support zone, which is highlighted in blue. So another support zone was formed, which is highlighted in yellow. The price tested this supply zone again, but still couldn't break the supply zone. And you can see the last candle was closed as a bearish candle in red. Now the last candle isn't closed yet because the chart is currently in a daily time frame, so the candle will close at the end of the day. This example shows the importance of a supply zone in the market. When you spot a supply zone, you can use that opportunity to trade by selling the market in that zone. But as the supply zone in Forex trading doesn't always work, the supply zone can't always be an accurate indication to sell on a supply zone. In this example, we do have three indicators which are making the analysis really powerful. First, we have the supply zone. Second, we have the resistance that's being tested multiple times, but it's not broken yet. And third, we have a potential triple top pattern forming. Hopefully you understood how to identify a supply zone in the market. Now let's quickly move on to an example of a demand zone. The yellow and blue lines, which are highlighting support zones that were formed by the double bottom pattern, indicate that the price is facing the momentum of buyers on the market. And that's why these support zones were created. You can also see that both support lines are not at the same price. There's a gap between the support zones. Well, this gap has occurred because of the demand zone. The yellow and blue lines, which are the support zones, indicate the momentum of buyers in the market. So a demand zone was created. After the price created the first resistance on the supply zone, the price dropped with a good amount of pips and created the support zone. The price tested the supply zone, which is the resistance zone, but couldn't break it, and it dropped again by creating another support zone. The momentum of buyers created the demand zone, acting as a decisive zone because it's not allowing the price to go any further down. So that's the example of a demand zone. Now, in a demand zone, traders will look to buy, while on the supply zone, the traders will look to sell. When you draw supply and demand zones, it should always be based on the momentum of that zone. So in this example, I've drawn the supply zones because of the resistance zones which respect each other. However, you can also draw supply zones based on the wicks of the candlesticks. A similar example of drawing can be applied to a demand zone. You should draw the rectangle based on the momentum of the zones. So I've drawn the demand zone because of the support zones where price has touched the support zone. Anyway, if you don't draw the zones correctly when you spot a supply or demand zone, even if you draw the rectangle, not in the accurate position, it's not a big deal. When you draw supply or demand, you should always know that the zone is very decisive in the next movement of the market. To get a better entry price, you should rely on other technical indicators such as the resistance, support, market patterns, and more. With this example, the lesson of supply and demand is complete. Hopefully you've learned how to identify supply and demand zones, as well as how to draw them.